Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. The global setup is looking pretty mixed today because we saw a handsome rally coming in on Wall Street. You know, the post-US election or post-poll rally continues on Wall Street. Asian markets, however, were not really following their US peers, but the GIFT Nifty initially was hinting at a muted to negative start, but has edged back into the green. So here in the Indian market, we had seen a 2-day rally, that saw an almost 900 point kind of recovery on the Nifty. And we were above that 24,200 mark yesterday. The big question that was or that is in everybody's mind is whether or not the Nifty will make a dash at that 24,500 mark on the upside, post which some technical analysts believe that, that would be the time to call it a trend reversal. But today looks like we could be taking a pause, but given the fact that the GIFT Nifty has inched back into the green, who knows, we could see another positive open. And also don't forget that foreign investors turned net buyers yesterday after 38 straight sessions of sell-off, of selling rather. So they have snapped a 38 session sell streak, so that could be a positive. But of course, there was that MSCI rebalancing that happened and led to buying by FIIs. So that could be one reason behind it. Whether or not this is a trend reversal or whether or not FII sell-off has reduced significantly is something that we'll have to ask our experts who will be joining us later on the show. But lots of cues to watch out for. Stocks in focus: HUL, Zomato, because Zomato's QIP has opened up. So we'll be talking about all these stocks. We'll be taking up all your stock related queries as well. If you have any queries, shoot them to us on our YouTube feed. We'll try and take them up. But of course, let's quickly take a look at the headlines first. The Wall Street rally continues with Dow and S&P 500 hitting fresh record. Meanwhile, the US 10-year yield slips as Trump picks Scott Bessent to lead the Treasury Department. Asian markets, on the other hand, trade with losses. GIFT Nifty was suggesting a negative start but has now inched back into the green. Israel's cabinet is likely to meet today to decide on ceasefire agreement in Lebanon after over an year of fighting with Hezbollah following the October 7 attacks last year. Crude prices slip over 2% with the Brent back around the $72 barrel mark as Israel and Lebanon reportedly move towards a ceasefire. Meanwhile, gold rally has also paused with prices falling nearly 3.5%. US President-elect Donald Trump announces he will raise tariffs on Chinese goods by an additional 10%. Also pledges 25% tariff on all products from Mexico as well as Canada. And in a slew of decisions, the cabinet approves the PAN 2.0 project to enable tech-driven transformation of taxpayer services. 2 hydroelectric power projects and 3 rail projects worth nearly 8,000 crore rupees are also cleared. Sources also suggest that the cabinet has approved bank guarantee waiver for telecom companies. Well, yesterday was a good day of trade. We saw another 300-point rally coming in on the Nifty. So, in a matter of 2 sessions, the Nifty has gained over 800 points or 4%. Of course, that was attributed to the, Maharashtra elections and the Mahayuti's decisive victory in the Maharashtra polls. Of course, in terms of Nifty, we did reclaim that 24,300 mark, albeit briefly, but 24,200, we saw a decisive close above that. The Nifty Bank Index also saw great performance, 2% kind of gains vis-a-vis a 1% gain on the Nifty and Sensex. So the Nifty Bank Index was an outperformer. Let's also talk about the Nifty PSU Bank Index, 4.5% uptick there, strong rally, and PSU stocks saw big action in yesterday's trade. But in terms of private banks, HDFC Bank managed to clock a fresh high yesterday, finally moving past that 1,800 rupees mark and hitting a fresh 52-week high. ICICI Bank, RIL, these were the other top contributors to Nifty gains yesterday. Realty as a pack also was extremely buoyant. And, aside of that, if you look at the Nifty, put call ratio, it fell to 1.11 from 1.19 in the previous session. Let's also look at the stocks in the F&O ban. No new additions. 3 counters will still be in ban. Aarti Industries, GNFC, Granules India. But out of ban, the 4 stocks have come out of F&O ban. These are the likes of Adani Enterprises, Nalco, Hindustan Copper as well as IGL. But let's talk about fund flows. Foreign investors have turned buyers in the cash market after selling for 38 consecutive sessions. Now, FII net buy, FIIs rather net bought stocks worth 9,900 crore rupees in the cash markets. DIIs, however, were net sellers to the tune of 6,900 crores in the cash market. Now, experts believe that this move was influenced by the MSCI rebalancing, and the changes in MSCI led to purchase of around $200 million worth of shares in the Indian markets. As part of this rebalancing, FIIs bought 21.4 crore shares of HDFC Bank that was valued at 38,164 crore rupees. But on that note, let me bring on board our guest for today. Joining me, Ajit Mishra, who's the Senior VP Research at Religare Broking. Ajit, great to have you on the show. A cool 800 to 850 point kind of an up move on the Nifty. But would you still stick your neck out and say that no, it's not a trend reversal, it was just a feel-good factor? And here on, we have to wait for a decisive close above 24,500 to actually call it a trend reversal. What are your thoughts?
Yeah, good morning, Nandita. So yes, it's been a definite relief for the bulls, because we were seeing a gradual decline in the index. We were roughly around down around 11% from the record highs, and there was hardly any respite. In fact, we've reached the long-term averages also when it comes to the index Nifty. So this 2 days of rebound should be considered as a rebound so far, considering that no doubt we have reclaimed long-term average 20 EMA. But weekly basis 24,350 in my opinion is the critical barrier, which also coincides with the resistance of 100 EMA on the daily charts. So I feel that 24,350, in fact not 24,500, in fact on the closing basis, if we manage to hold this level, it seems like that we are set for the short-term trend reversal, which can push the index towards 25,000 plus zone. So yes, yesterday we have tested that mark, but we couldn't surpass, and today we also seeing bit of a profit taking. So now this zone, 23,850 to 24,000, that's the major area that Nifty should hold if we need to see any reattempt of recovery or a reversal. So as of now, the way we have moved up in the last two trading session, plus the buoyancy which we are still seeing in IT and banking, which are the two major constituent of the index, there could be an attempt. So traders should look to go long around this support area with 24,350 as a first resistance, and then 24,500 to 550 as a next target zone.
Okay, 24,350, that would be the crucial level, according to Ajit, on the upside, of course. And 24,351, that was a swing high that was made yesterday. So that will be a crucial level to really watch out for. But, you also mentioned, some of the banking names. But in terms of the Nifty Bank Index, a good 2% up move yesterday, was outperforming the other benchmarks. Would you look at a dash at all-time highs anytime soon? And HDFC Bank, particularly this counter, crossed that 1800 level. What are the kind of levels you'll be watching out for? Is this a fresh breakout on HDFC Bank?
So, Nandita, for HDFC, yes, we are again closer to the record highs, and it's important because in the last instance also when we reached to that mark, the banking counter slipped sharply afterward. But this time around, it's, I guess, the fourth attempt to reclaim its record high. And I feel this time around the possibility seems high, considering that the banking index has also surpassed its multiple resistances. Now, for banking index, 52,500, that is what we are eyeing as a critical make or break area. So once we cross that mark, then definitely there's a possibility that banking might also make an attempt to extend this recovery and inch toward the record highs. And HDFC, ICICI, I feel these two names from the private banking space are likely to play a prominent role. So for HDFC, definitely one should stay put, for the long trades, with 70-50 being closing stop loss, and upside is open. So one should not restrict the target for HDFC Bank, considering that we'll be in the uncharted territory. But yes, 1750 on the closing basis should be a stop loss, and you can maintain your longs.
Okay, that's the view on HDFC Bank. I can spot a query also on our feed, from somebody on HDFC Bank. Hope that query is also answered. I think Hemant wanted to know, and he's making a profit of 12% as well on his holdings. But the other stock that will be in focus today is HDFC Life. Of course, it has reported some sort of customer data theft, and investigation is underway. And it's an unknown source, that has shared certain data fields of customers with malified intent. The company has initiated information security assessment and data log analysis, and a detailed investigation is underway to assess the root cause, and the company of course will be taking remedial action if necessary. It will continue to investigate to assess the potential impact of this data theft and will take utmost care to handle concerns of customers, and the customer interest will be safeguarded as well. HDFC Life, in fact other life insurers also saw a significant pressure, given the fact that recently Finance Minister had warned banks from mis-selling insurance and focus on banking activities. And a lot of or a big portion of revenues for these insurers come from bank assurance, right, for the likes of HDFC Life, SBI Life as well, and which is why the stocks had reacted pretty strongly to those comments from Finance Minister. But now, given the fact that there is this data theft issue that could put some pressure on the stock, 684 or so is where the stock is really placed at right now. The stock has been under pressure if you look at the monthly charts as well. But in terms of a support zone, would you be watching out for any level here for HDFC Life in particular?
Certainly, Nindita, so like you rightly mentioned that the stocks were anyways languishing from last several months, and the good part is that the tone, at least, or the pace of decline was on a gradual tone, and with this news, maybe it might further dent the overall trend. But the good part is that we are very closer to the long-term support area for HDFC Life, which is placed around 660 zone. So we are currently quoting at 684. So if somebody is holding longs, then they should definitely maintain 660 as a strict stop loss. And if you are looking for any long trades, then one should wait for any dip towards that area, because usually we see the stock or any underlying which retests their long-term averages witness some respite or rebound. So basis on that, one should wait or maintain 660 as a strict stop loss. In case of a bounce, 700, 710, right, that will be the area where we have multiple resistances.
Right, just coming to you in a bit, Ajit. We have the first ticks coming in, and I know the bulls, refuse to really take a break at this current juncture, because we've had a positive open, a strong, not very strong, but yes, a firm start. So to say, a 60 to 70 point bump up coming in on the Nifty, so around that 24,300 mark. Initially we had thought that it will be a day of breather, or there could be some bit of selling coming in at higher levels. But right now at open, things are looking pretty hunky dory. We are around the 24,300 mark. The Sensex is well up over 200 points. The Nifty Bank Index 52,200 is being held on to, inching towards 52,300 as we speak. Mid and small caps moving in tandem with the benchmarks. So yes, it's turning out to be a good open. Let's see how things really proceed from here. But in terms of other sectors, let's take stock of what other sectors are doing at the current juncture. You have the FMCG pack that's showing strength, 0.7%, kind of gain coming in there. IT pack is looking strong, 0.8% kind of gain there. What's not doing well? Well, it is the auto pack that's in the red, energy as well, 0.3% kind of loss coming in there. Metals not doing all that well. There is news flow around, what Trump plans to do in terms of tariff, when it comes to Canada, Mexico and China. So we'll take stock of that in just a bit, but metals for now on the back foot. PSU banks, here the bulls have taken some bit of a breather, because the PSU bank index is marginally in the negative as we speak. But in the last two sessions, the PSU banking index has amassed gains of somewhere around 8 to 8.5% or so. So taking a break. But Realty pack is also looking strong, 0.5% gain coming in there. In terms of individual movers, I want to see which are the stocks that are leading from the front today. Infosys, Top Nifty gainer, Bharti Airtel closed second. BEL, Bharat Electronics, continues its upward march. Yesterday, PSU stocks were also seeing big action, and today as well, some of these PSU names are doing well. Bharat Electronic being a case in point. Tech Mahindra, Wipro, so all these tech names are in favor today. Yesterday, some of them were not in favor. Tata Steel among top gainers. Cipla, HUL, will be spinning off its ice cream business into a separate entity. This stock is trading with mild gains as well. But the top gainer on the Nifty is Infosys. On the flip side, the stocks that are not doing all that well, Ultratech Cement, Eicher Motors, NTPC trend seems to have snapped out of its winning streak. IndusInd Bank, SBI Life, Axis Bank, so some of these private banking names and private insurers are also under pressure. SBI also in the red as we speak. But looking at the open, Ajit, 24,300, we are maintaining those levels. Would you expect a close around 24,350, or would you say that there are chances of some bit of sell on rise kind of scenario kicking in?
So Nandita, just in line with what we saw yesterday, that after the initial gap up start around 24,350, Nifty continued to over in a tight range, and then we saw some profit taking. The good part is today IT is taking a lead to push the index higher. We need to see whether this trend holds or not. But as of now, yes, I'm positive that maybe in a day or two we might see an attempt of index crossing this mark. So as of now, one should be focusing more on buy on dips opportunities in the index as well as on the stock specific front, with preference to IT and banking as a key sector.
Okay, IT and banking key sectors where you can exercise buy on dips. That's the view. But let's shift focus to talk about the telecom space as well. Sources say that cabinet has in fact approved a waiver of bank guarantees to the tune of 30,000 crore rupees when it comes to telecom companies. This of course comes as a shot in the arm for Vodafone because it has approximately 24,600 crore rupees in bank guarantees. Airtel also gets the benefit of bank guarantee waiver, given the fact that Vodafone has tenancy and exposure to Industars as well. Vodafone is up almost 10%. Bharti Airtel also among top Nifty gainers. Would you be a buyer?
So Bharti Airtel definitely yes, Nandita, because we all know the kind of steady performance that Bharti has shown in the last several years, and of late also after this marginal retracement from the record high 1750 to 1500 mark, we are again seeing the stock has been gradually inching higher, and we expect this recovery to further strengthen with the potential upside towards 1700, 1720 in the near future. So definitely one can look to go long even at current levels with 1550 as a stop loss, with 1700 as a potential target. For those who are holding idea, because we all know that due to the price and the absolute price, people have interest. But just to put things into perspective, from 14 to 7, almost half, there was hardly any recovery, and once we, let's say, break this mark of 8, then this rebound may extend towards, let's say, 9, 9.5 or maybe 10. So around that area also, if somebody is holding longs, they may look to liquidate their position if the view is short term and switch to Bharti Airtel as a better bet.
Okay, that's the view on the telecom pack. But aside of that, let's talk about a Zomato. The 8,500 crore rupee QIP has kicked off. Floor price has been set at 265 rupees, 0.9 rupees in fact per share, which is at a 7.6% discount to yesterday's close price. Of course, the company the stock will be replacing JSW Steel on the Sensex as well come 23rd of December. The stock saw a good up move, saw good traction. When it comes to brokerage houses, they've given target prices of over 350 rupees, 300 rupees or so. But there are a couple of brokerages who have 130 rupees kind of target as well. I'm talking about Macquarie here. But in terms of the way the stock has recovered and given 125% kind of returns on a YTD basis, despite the kind of correction it saw, would you say that 330, 350 kind of levels looks possible in the very near term?
So record highs, yes, we can retest 300 plus zone. That is seems possible because after this marginal retracement towards its 100 EMA, we saw base formation for almost a couple of weeks and then again a rebound. So we are very close to the record high zone, and we have in fact formed a fresh buying pivot while holding up the short-term averages. So everything looks aligned for a new high, and the risk reward is also okay. I won't say that's very favorable considering that we have a support at 260 now. So it's a highly volatile counter. So based on that, one should maintain the stop losses accordingly. And 300, 305, it might be the area where the last record high that we made around that area, it might take a breather first. So if you are okay with 1:1, 1.5 as a risk reward ratio, you can continue to go ahead. With the long position in Zomato with 260 as a closing stop loss and 305, 310 as a position target.
Okay, that's the view on a Zomato. But let's talk about the realty space as well, Ajit. This space has been on an upswing. I think it's the seventh straight day of gains for the realty index, and of course, with the BJP-led alliance Mahayuti's victory yesterday, realty stocks and even in Friday's session, realty stocks were on very solid ground. We have queries coming in on some of these counters, Oberoi Realty as well as DLF. Debu K wants thoughts on Oberoi Realty, and Ayush Khanna wants your short-term view on DLF. DLF saw 10% up move in the last 5 sessions. I think even Oberoi Realty has seen good gains coming in, 2% or so in the last 5 sessions. But given the fact that there is news flow and things bode well for realty, DLF and Oberoi, how do these two look, and what should be the strategy here?
So Realty as an index, in fact, Nandita, we have seen a decent rebound thanks to the heavyweights which have rebounded very strongly. And DLF, overall Realty, these are among the top performing names alongside with the Grozes property, which is trading very closer to the record highs. So I feel that yes, after this move, we might again see some consolidation. So for DLF, I feel that level close from 870 to 875 is the area basically where we have multiple resistances. With support at 775. So still the risk reward is favorable if somebody is looking for a positional trade. You can in fact initiate fresh longs also at current levels with 775 as a closing stop loss and closer to around 875 to 900 as a positional target. And that's the upper band of this stock also, that it's been hovering in this range for almost 6-7 months now. So around 900, 925 definitely you should book profits. Overall Reality, on the other hand, it didn't participate much on the downside during the recent correction. So that further indicates that relatively it's better placed within the realty space, and a breakout about 2040 area might trigger a next leg of the up move in the stock. So here also my view is to maintain longs. So you can go fresh also with 1860 as a stop loss, and once we break 2040 mark, then maybe closer to around 2300 is something you can maintain as a target zone.
Okay, those were the views on DLF and Oberoi Realty. Hope that answers your query, but let's move on to some more queries then. Nitin Shahji wants your thoughts on Piramal Pharma. Now, this stock has been on a tear. If you look at the last 3 months, 6 months, good solid 35 to 60, 70% kind of returns. But in the last 1 month, gains have become a little more tempered. It is still, 50, 60 rupees away from 52-week highs as well. Any thoughts here? Do you think the rally that the counter has seen, it's kind of topped out, or would you say that the dips that it is witnessing at the current juncture should be bought into?
I also feel that at least for the short term, we have made a top, considering the way the stock advanced from 240 to 300 and a similar kind of a decline. So with volume, so that indicates at least a short-term top. It might remain in a range with 230 to 40 being the lower band, around 260, 70 as a upper band. So that could probably the range that the stock might hover in. If somebody is anyway stuck in the long position, they should definitely maintain 240 as a strict stop loss and use any recovery toward 265, 270 zone to reduce their position. And within the pharma space, Granule is set for the next leg of the up move. So if somebody is looking for a replacement, they can go ahead and buy Granules.
Okay, that's the view, and granules, that's the preferred pick in the pharma space. But next query then, it's on EMS Limited. This one's coming in from Puneet Rajiv Saxena. He's holding 860 shares since August. Wants to know if he should buy more, and his time horizon is 2 years plus. The stock has come, under some kind of correction. Last 3 months, we've seen negative returns vis-a-vis a 60% kind of an up move. If you look at the 6-month basis, should he average?
So since his view is long term, he can at least add partially around the current level after this correction and wait for further dip in case if it sees any dip towards 650 area. That will be the ideal zone around the long term averages. To add more. So yes, partially he can add at around current levels, but for major position, maybe 50% or more, one should wait for a dip towards 650 area.
Okay, wait for a dip around 650 area. That's the call then. Hope that answers your query. Let's move on to the next query then. I want to take up one on IOC. This one's coming in from Satvika Ranganathan. Wants your thoughts. Hasn't really mentioned a time horizon here. But fairly volatile OMCs have been in the last month, right? And we've seen fluctuations in the crude prices as well. But in the last 6 months, we've seen a 19% kind of correction on the stock of IOC. Any thoughts? Any change in trend? What are the charts really suggesting now?
So, Nandita, in fact, I would recommend looking for the outperformance within the sector also, and it's all about looking for the players which are relatively stronger within the sector. So, basis on that, IOC is the weakest candidate within the OMC space based on the recent price performance, and we feel that though we are seeing a rebound across the OMC basket, still the quantum, the way we are seeing the recovery is comparatively less, to BPCL and HPCL. So I feel that it's time that if she's having any losses also in this position, to liquidate this and switch to Hind Petro. And for Hind Petro, I would recommend it's quoting at 388 right now. So with stop at 375, she can switch this position, and positionally 420 to 430. That is a closer to their record high zone. It might witness this kind of recovery. So with that as a stop loss, one can look to switch from IOC to Hind Petro.
Okay, switch from IOC to HPCL. That's the advice coming in from Ajit. But Ajit, a few more queries that I would like to squeeze in. Query coming in on a Kaveri seeds from Satya. Wants to know whether one should hold or average. I think the stock is trading ex-dividend. It has gone ex-dividend from today. Aside of that, you also had news flow around LT Foods. It has made a foray, I think, in Saudi. So that's another stock that's in focus. Between the two, where is the chart looking better, and in terms of risk reward as well, which stock would you recommend?
So LT Food is definitely among the top performing name within this basket, but now we are seeing a bit of a profit taking. So short term, if somebody has to look at as a trade opportunity, then Kaveri Seed KSCL is a better candidate to look at, because the stock has already witnessed decent correction from its record high, and currently we are hovering around the neckline area of the previous consolidation range. So the risk reward is favorable, and in case of any up move, once we cross 950, then there is a possibility that it might inch toward 1050 or maybe 1100. So with 810 as a stop loss, one can definitely look to go long in Kaveri Seeds at current level, with 1050 to 1100 as a positional target area.
Okay, that's the view on Kaveri Seeds and an LT Foods. I want to take up a query on NBCC. This query has come in from Anunay. Wants to know what he should be doing with his holding, because he has shares at 120 levels. He wants to know, should he hold on or book losses and exit. The stock is at somewhere around 95 rupees. What would you advise him to do?
So, Ananta, we all know that kind of move that we saw in most of these PSUs, and now we are seeing post the corrective phase. Still, they are majority of the counters. They are still not participating in the move. What we are seeing in the recovery so far. So, I would recommend utilizing this rebound which we are seeing in the counter. So, maybe close to around 102 is something that you should definitely look to exit his longs by taking losses. And in the interim, do maintain a stop loss at 86. Once we break this mark 86, then it might witness further decline towards 73, 74 also. So the risk for further declines still seems high. So use any recovery towards 100 to 103 area to reduce your position.
Okay, that's the view on an NBCC. The next query then
Is this background
coming in
better?
from Rajesh. He wants to know your thoughts on Kim's Hospital for the next 1 year. The stock has seen good momentum in the last 1 month. Even the last 6 months have seen good 60 to 65% kind of up move. Stock is just around that 600 mark, not very far from 52-week highs as well. Is there still chance of more upside from here?
So Kim's basically we are seeing almost a record high kind of a trade, and volumes are strong. So everything looks perfect. It may witness some profit taking the way it ended yesterday, but overall tone still looks positive. So you should definitely stay put with 580 as a closing stop loss. And as per the previous consolidation range, the next stop could be close to around 660. So risk reward is favorable. Definitely you can maintain your longs. You can buy fresh also.
Okay, that's the view on Kim's. But one more query then from Naveen. He wants to know your thoughts on Reliance Industries with time horizon of 2 years. After the recent correction, we have seen a lot of brokerages coming out with their positive views on Reliance Industries and how the stock could, touch levels of 1600 or thereabouts. And the stock has been consistent performer of the last couple of sessions, right? It has emerged as the top contributor when it comes to the Nifty gains as well. Do you see a fresh leg up of up move? And if somebody has to take a call on the stock with a time horizon of 2 years, what would you advise?
So certainly I would recommend him to stay put, and in case if he's planning any fresh trade also, then they can go ahead with this. And overall, I also believe that after this correction, that stock has re-entered into the previous consolidation zone. So the possibility of further decline seems pretty low. Means this 1200, 1250 is the multiple supports that we have for this stock, and that's the reason why we are seeing this rebound also. But the quantum of recovery is still, comparatively lower to what we are seeing in the other heavyweights. But I feel that this scenario is likely to improve. So definitely, it's a time to accumulate this stock in this range of 1300 to 1250. And positionally, as a first area of hurdle could be close to around 1400 mark, and then a new high, maybe 1600 plus. So since this time horizon is long term, definitely you can utilize this opportunity to accumulate.
Okay, that's the view on Reliance. That was the last query for today, and with that, we've come to the end of the query segment. But before I let you go, Ajit, any recommendations for viewers for today or for the rest of the week with the short-term time horizon?
Certainly, Nindita, so like what we've shared, that banking, IT, these are the two key sectors which we have been recommending to our clients also. And from the IT pack, Infosys is something that we like. In fact, after a day of pause, today we are seeing Infosys being one of the top contributor to the index. And once we cross 1950 mark, then probably 2100 is something that the stock might head to. So with stop at 1850, one can go long in Infosys for a positional target of 2100 mark. Then from the banking basket, Federal Bank, another outperformer, the stock is trading at the record highs after 4 months of consolidation range breakout, and we expect this prevailing tone to continue. So with stop at 208 for the short term trade, one can maintain as a target of 220 in a day or two.
Okay, those recommendations coming in from Ajit. With that, Ajit, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure.
Thank you, Nandita. Thanks a lot.
Well, on that note, then let's just quickly take a look at the market. Then we are holding on to gains, 75 point higher on the Nifty, around that 24,300 mark. The Nifty Bank Index as well is holding on to 52,300 mark. So it's a good, up move on the triple digit up move on the Nifty Bank Index as well. So looking good for now. Whether or not we manage to maintain the momentum is something that we'll have to really watch out for. But on that note, let me bring on board our next guest for today. Joining me is Kunal Shah, who's a senior research analyst at Carnelian Capital. Kunal, speaking to you after a long time, and a lot has really changed. The entire complexion of the market has actually changed. We saw a steep correction coming in, 10% kind of a correction from record highs. But thanks to the Maharashtra election verdict, we've seen a good 800 to 850 point kind of, or 900, or almost 1,000 point recovery on the Nifty. And of course, first of all, tell us what do you really make of this up move, because earnings season was second quarter earnings season was a washout, so to say. So is this just a feel good factor, or would you say that the worst is behind us and we could remain around this area only as we look to end the year?
Hi Nandita, I actually missed your starting part, but as far as the earnings season go, I have a little bit of different take. While earnings, for sure, across the board, has been not good, but if you live out the pack of oil and gas commodities, right, then in H1 we have shown an earnings growth of about 9% on year-on-year basis, right, for Nifty. So that's a decent growth number. Actually, if you remove the pack of oil and gas and commodities, which have kind of really done bad. Also, there have been some pockets where numbers have been decent. So all in all, we have already seen stocks getting corrected almost from the peak levels to about 25% odd. There are pockets where we believe there is a reasonable opportunity. There are sectors which we believe where earnings have been good and should continue. Right. So overall, things look good from here on in certain pockets. From here on, it will be more like, pockets where valuations are reasonable and earnings are going to come by should for sure see traction, while markets probably may consolidate over here for some more time.
So which, according to you, are those pockets where earnings are expected to come back sooner than the rest?
I think pharma as a sector continues to do good, right? So while the domestic pack continues to deliver about 8 to 9% growth, the US market continues to hold on. So pharma is something which looks really very good. PSU banks and private banks numbers have been decent, right? I mean, while there have been NIM consolidation that has happened, but still at PPOP level and PAT level, the growth has been decent. While loan growth has come off, but still the numbers are decent, and post correction, the valuations in PSU banks looks good. Private banks continues to look good. Life insurance sector continues to see reasonable valuations, and the regulatory challenges kind of looks behind. Certain pockets of IT also saw good numbers, so that is also something which should kind of continue to do good. Certain pockets of manufacturing, saw decent set of numbers. So, I mean, there are pockets like the ones which I mentioned, which are at reasonable valuations where numbers were decent, and they should continue. And therefore, I believe there is decent money making opportunity, in these sectors.
Let's talk about IT then. Of course, Indian IT stocks haven't really seen any meaningful upgrades post the second quarter earnings. Yet earnings were okay. Yet the index is up somewhere around over 20% for the year. Would you be worried about valuations? Do you believe that the sector has already bottomed out? How much upside do you see?
I think the markets have been discounting machines, right? They discount way ahead before the earnings actually come by, right? So that is what we are seeing in IT as well. I mean, they are one of the beneficiaries of the rate cuts whenever they happen in the US. Also, BFSI spending has come big bang in US, right? So that all should translate into your TCVs for IT companies. There are certain pockets in mid cap ITs where valuations have kind of become stretched, but still large cap ITs and few select IT companies in small cap space have got decent valuations commensurate to growth. So yes, certain pockets I do agree with you, right? That valuations have kind of fast-paced the earnings that would come by, but there are still pockets in the sector where valuations are reasonable.
All right. Would you take a bet on mid cap or large cap IT then?
Both. I mean, a large cap IT preferably should do good, but in mid cap IT also, certain ER&D companies trade at decent valuations. There are few product companies, that trade at decent valuations. There have been CEO changes in few mid cap companies as well, right, which are available at decent valuations. And if management change is able to deliver, then there is real money making opportunity out there as well.
All right. Shifting focus to consumption then. HUL, of course, will be separating or demerging its ice cream business and listing it as a separate entity. But how would you really view this move, in terms of value creation for shareholders? And B, when we look at the earnings for some of these large cap FMCG names, we've seen this theme of urban consumption slowdown come to the fore. But do you think that was just a one quarter phenomena, or do you think that is something that could, snowball into a serious concern going forward?
I think both urban and rural, when it comes to consumption, is something which has not been kind of picking up for quite some time. There were hopes that rural would kind of pick up, post good monsoons, but again, this quarter the numbers were a little back, a little bad. So, consumption basically, is something which is not doing good, and one needs to have a look at what India is consuming, how they are consuming, because there are certain pockets in consumer discretionary actually which have done good, right? So large FMCG companies, one needs to be really watchful as to how kind of numbers play out, and more so because of the valuations that they trade at as well, right? So I would be really cautious of large cap FMCG names while they have seen corrections. But still, the earnings, one needs to be watchful as to how soon they come by, because rural is something which is not picking up, and now urban has also kind of seen slowdown. More than that, structurally, how India is consuming is changing, what India is consuming is changing, right? So, where one need to see structurally, how this plays out in the long term.
Right. But what about quick commerce? A lot of action there. We've seen a new entrant as well, Swiggy, and it's just a matter of time when Zepto as well comes out with its IPO. In that sense, would you believe that, given the fact that Swiggy is available at a discount, there is a valuation gap between the two, and it is yet to come to profit, or to swing to profitability rather. Do you see that the valuation gap could narrow going forward? How are you really approaching the entire quick commerce space right now?
See, there's real action out there when it comes to quick commerce. In our interaction with many companies, we see that quick commerce is something which is like, which could kind of become as big as modern retail in the years to come by. But then the whole model's profitability will have to be seen, right? So we have not yet kind of, pushed the button on quick commerce companies. We'll see how these companies kind of have their path to profitability chalked out, right? So, so far we have avoided this, but nothing taking away that quick commerce is something which is really changing the way how things get delivered and how things are getting consumed.
I think one question that I asked you, I didn't really get an answer to that. So, talking about the HUL ice cream business spin-off, any thoughts there in terms of value creation?
I'm not tracking actively, so would not want to comment. Therefore, I avoid it. But I have
No
shared my
worries.
thoughts on the consumer piece overall and FMCG piece overall.
Sure, sure. Last couple of questions really. We saw FIIs, snapping out of a 38 session selling streak yesterday. Of course, much of it is attributed to MSCI rebalancing as well. But according to you, looking at the numbers of Friday as well, do you think the FII sell-off, it could have actually slowed down now, or do you think it will continue given the fact that dollar, continues to strengthen, and instead of China being a threat, now money flowing back into the US is a bigger threat? Your thoughts on FII sell-off and how things are panning out? Any thoughts there?
See, in the near term, there could still be challenges, on the FII flows. But the limited point in the making been that, there's no country like India, in terms of the earnings growth, in terms of the ROE. I mean, globally, we are one of the, countries which has got the best ROEs. Right, so it's a matter of time that flows start reversing and come back to India. Also, one needs to note that there have been a lot of supply, through IPO market and through QIPs and preferentials as well, which is kind of sucking this liquidity as well. So the limited point being, yes, FIIs flows may kind of remain subdued for a few more months, but then eventually, considering the place where we are structurally, it's a matter of time, if not now, then when.
Got it. And lastly, in terms of sector rotation in this leg of the up move that we are witnessing right now, any which other sectors one should move into? Pharma, IT, you mentioned, but anything else that's caught your attention?
Yeah, I think private banks, PSU banks, life insurance, a few select IT companies in auto two-wheeler space is something which is kind of doing good. So there are quite a few good auto banks, catering or have big presence in two-wheeler markets, are also something which can be looked into, because two-wheeler is something which continues to do good, while PVs and CVs have kind of seen some pressure, right? But two-wheelers, I think, continues to do good, and they will surpass the COVID levels in the coming years, and will have further growth from there as well. So these are the few pockets. There's whole pharma is such a big sector, right? There are formulation players, there are API players. There's a real tailwind out there because of the Biosecure Act as well. So all these are really opportunities which will translate into earnings in the coming years.
Right, got it. Kunal, with that, I would like to thank you for taking out time and joining in this morning. I'm afraid we're running out of time. But as always, a pleasure having you on the show and getting all the market insights from you. Look forward to connecting again sometime soon.
Thanks, Nandita. Pleasure.
Thank you. Well, then on that note, just looking at the markets, cooled off from the day's high, just about 20%, 20 points, I beg your pardon, high on the Nifty. The Nifty Bank Index has slipped into the red as we speak, just below that or around that 52,200 mark. And in terms of individual movers, it's the Adani group of stocks that are under pressure, this morning. Adani Enterprises and Adani Ports, two top losers on the index, aside of UltraTech Cement, Bajaj Auto and Eicher Motors. L&T, M&M Trend, these are some of the other laggards. On the flip side, you have Bharat Electronics. This stock continues to pick up steam. Yesterday, it was among the top Nifty gainers. Today as well, it's the top mover as of now. Some IT names seeing good traction today. Infosys, Tech Mahindra, HCL Tech, Wipro, these are all among the gainers. But for now, we are a little, volatile, so to say, cooled off from the day's high, but hanging on to gains as of now. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in, but you guys stay tuned to Money Control for all your other news and updates. And of course, have a great trading day.